Welcome to Smart Investment Cover, where you learn to manage your finances in a smart, simple, and effective way. Here, every small step can be the beginning of a great journey toward financial freedom. We cover stocks, ETFs, mutual funds, and global investment strategies, explained in a way that's easy to understand. Our goal is simple: to help you build long-term wealth with proven strategies. With Smart Investment Cover, let's begin the journey toward a safer and more prosperous financial future. Subtitle 1: Why Global Investments Matter for Beginners. Many beginner investors feel content with local markets. But in reality, global markets offer far greater opportunities. Global investing opens doors to world-class companies like Apple, Tesla, and Samsung, often unavailable in local markets. Diversification is key. By investing across countries, risks aren't concentrated in a single domestic market. If the domestic economy slows down, a global portfolio can still grow, supported by other economies. Global investing also gives access to sectors unavailable domestically, such as advanced technology or renewable energy. Global markets provide the chance to benefit from growth in emerging countries while enjoying stability in developed ones. With global investing, beginners can learn international trends and expand their financial knowledge. Domestic inflation or crises don't always affect foreign markets. A global portfolio helps maintain asset stability. Investing globally prepares beginners to face the shifts of an increasingly interconnected world economy. Global trends like artificial intelligence, green energy, and e-commerce can be accessed faster through cross-border investments. Starting early gives beginners more time to benefit from sustainable global growth. So global investing is important for beginners not only to seek profits, but also to protect assets from economic uncertainty. Subtitle 2: Essential Global Investment Instruments You Should Know. So global investing is important for beginners not only to seek profits, but also to protect assets from economic uncertainty. International stocks are a key instrument, offering the chance to own shares of major global companies. Global ETFs are popular as they provide access to hundreds of international stocks in a single instrument. International mutual funds are managed by professional fund managers, suitable for beginners who prefer a practical way. Foreign bonds offer fixed income opportunities while diversifying away from stock market risks. Global commodities like gold and oil can also be investment instruments to protect asset value. International real estate investment trusts, REITs, provide access to global property markets without direct ownership. Global derivatives such as futures and options offer high profit potential, but also carry high risks. Foreign currencies or forex are often used by global investors to hedge against currency fluctuations. Global dividend stocks are favored by investors seeking passive income streams from international companies. Each instrument has its own characteristics, strengths, and risks. Proper understanding helps investors make the right decisions. By knowing global instruments, beginners can build a more balanced portfolio that withstands volatility. Subtitle 3: How to Start Global Investing with Small Capital. Many people think they need big capital to invest globally. In fact, beginners can start with small amounts. Modern platforms now allow beginners to buy international stocks with small amounts. With fractional shares, investors can own a small portion of big stocks like Apple or Google. Global ETFs also allow small capital investing since they include many international stocks at once. International mutual funds can be purchased with affordable initial deposits, perfect for beginners. Even with $100, beginners can build a diversified global portfolio. Technology makes the process easy. Through smartphone apps, investors can buy global instruments in seconds. Regular investing, even in small amounts, can grow significantly over time thanks to compounding. Beginners should start with simple instruments first, such as global ETFs or international mutual funds. With small capital, the main focus is learning discipline and consistency in investing. Patience is key. Don't underestimate small capital, as its value can multiply over time. So starting global investing doesn't require being rich. Small capital is enough to open the path to international investing. Subtitle 4: Risks and How to Manage Global Investments. Global investment is promising, but it always carries risks. From currency fluctuations to political turmoil, all these can affect your returns. Currency risk is one of the biggest challenges in global investing. Exchange rates can change drastically in a short time. Beyond currency, political factors play a major role. Policy changes or conflicts can trigger market volatility. Different regulations across countries are another challenge. Investors must understand the rules before investing. To manage risk, diversification is key. Don't put all your capital in one instrument or country. Hedging strategies can also protect assets from currency fluctuations. Market research is essential. Smart investors always study global trends before allocating capital. Defining your personal risk profile is crucial. Every investor has a different tolerance for loss. Use investment managers or financial advisors if you're a beginner. They can help manage risks. Don't panic during market turbulence. Successful investors know how to be patient and spot opportunities. Discipline is the ultimate weapon. Stick to your investment strategy. Don't be tempted by short-term trends. Remember, risk can't be eliminated completely, but it can be managed. With the right strategy, global investment remains profitable. Subtitle 5: Beginner Strategies to Profit from Global Markets. Global investing is not about getting rich quickly, but about long-term strategy. Beginners must understand that great returns come from patience and planning. Diversification is key. By allocating funds across stocks, bonds, and global ETFs, risks can be more evenly distributed. Don't put all your money in one country. Local economic fluctuations can be balanced by investing in other markets. Discipline is an investor's weapon. By investing regularly, even small capital can grow significantly in the long run. Global markets always fluctuate. Don't panic when there's a drop, because the long-term trend is usually positive. Use a dollar-cost averaging strategy. Regular monthly investments can reduce the impact of price fluctuations. Don't be tempted by short-term trends. Focus on companies and instruments with strong fundamentals. Remember, the goal of global investing is long-term growth, not short-term speculation. Sector diversification is also important. Combine technology, healthcare, energy, and finance stocks for optimal results. Beginner investors must have a marathon mindset, not a sprint. Real gains appear after years of consistency. Review your portfolio regularly, but don't make frequent changes just because the market moves. With discipline, diversification, and a long-term vision, even beginners can achieve consistent global profits. Thank you for joining Smart Investment Cover today. Remember, every investment journey begins with a single step. Stay consistent, keep learning, and let time work in your favor. See you in the next episode. With Smart Investment Cover, your financial future starts today.